What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And oh boy, did we have a crazy day today in the markets, guys. What happened today was unbelievable. Earlier today, before noon, both the Nasdaq and the Nasdaq 100 were down almost 3%, and they ended up pulling off a green day. Absolutely unbelievable. Russell 2000 went down today 0.37%. Nasdaq, as I just said, went up not a lot, but at least it went up 0.05%. Dow Jones went down 0.45%, and the S&P 500 went down 0.14%. So let's say the final picture of the indices doesn't really say what happened today, guys. We were having a very nasty day earlier today with the S&P 500 down more than 2%, Nasdaq and Nasdaq 100 down almost 3%, Russell 2000 almost down almost 3% as well. So what did give rise to the massive sell-off that we saw today? Basically a report of Goldman Sachs that stated that we are very likely, according to Goldman Sachs, to see 4 interest rate hikes this year. So that's basically what spooked the markets. Then a bit before noon, we got a report of JP Morgan saying that the dip that we were seeing today was a viable dip, that most of the higher multiple stocks that have gotten absolutely decimated lately were showing legitimate dips that were viable. They also said that the indices were very oversold, and I think that that's a reason why we saw that report of JP Morgan that came out near noon. That was the main factor that had the indices recover the way they did it. Keep in mind, guys, that tomorrow at 10 a.m., because now the big question is like, okay, we had some sort of relief rally today. Can this relief rally keep on going on tomorrow? And that is going to depend pretty much on Jerome Powell, because tomorrow the chairman of the Federal Reserve is going to testify before the Senate, before the Urban Affairs and Banking, whatever committee of the Senate. That is going to occur tomorrow at 10 a.m. Eastern Standard Time. And obviously the markets are going to be very sensitive to whatever Mr. Jerome Powell says tomorrow before the Senate. And most importantly, we have to pay close attention to whatever Mr. Jerome Powell could be potentially saying about the reduction of the balance sheet of the Federal Reserve. That is the main concern of the markets as of now. And you guys also need to keep in mind that this is going to be a very interesting week for the markets. On Wednesday at 8:30 a.m. we have the CPI data report, the inflation report of December. That is obviously going to be absolutely critical for the markets. And we also have, guys, the earnings season kicking off officially on Friday. You guys know that every single earnings season kicks off whenever the big banks report earnings. I am talking about JP Morgan, Citigroup, Wells Fargo, BlackRock, and so forth. So these banks usually report earnings on Wednesday. And this week we're going to have a different situation, because they are going to be reporting earnings on Friday. As I just said, JP Morgan, Citigroup, Wells Fargo, and BlackRock. This could be a game changer. Remember that we are going to have later on in January, we're going to have the big tech companies reporting earnings. We're going to have a bunch of stocks of companies that have gotten absolutely crushed lately reporting earnings. And most of those stocks are off the highs, 50, 70, 75%. So what is going to happen if those companies happen to report better than expected earnings? Are they going to recover? Definitely. Are they going to be able to go back to all-time high? We don't know. That is going to be very interesting, and obviously, guys, next Wednesday with the CPI data report, I think, this is my personal opinion, that we are going to see the markets peaking a direction. I am not expecting that report to come better than expected because it is going to reflect the inflation data of December, which is a month in which a lot of people are traveling or buying stuff. So let's see what happens next Wednesday. I also want to show you guys because, as I just said, the Nasdaq 100 and the Nasdaq ended up pulling off a green day today, which was positive. The S&P 500 was very close to have a positive day today. But take a look at the nasty day that we had today, despite of the fact that we saw a very acceptable relief rally into the closing bell. So today we had 2,625 stocks going up, and we had 4,948 stocks going down. A very, but very nasty day, no doubt about it. I also want to show you guys something that is very important over here, which is going to be the 10-year Treasury yield, because it got very overextended today, and we saw let's say, an acceptable drop of the 10-year Treasury yield. Take a look at the 4-hour chart. So, and take a look, most importantly, guys, to the RSI of TNX, of the 10-year Treasury yield. It went up to 84%, so it was expectable for the 10-year Treasury yield to take a rest. So if TNX keeps on coming down, which might be the case because it is very overextended in major timeframes, I am going to be looking at 1.69%. We can round it up, let's say 1.7%, as the main area of lower support for this indicator. We are talking about a former area of resistance back from late November, also back from mid-October, and lastly, back from May and April of last year. So this is going to be a very important factor that we need to keep in mind for the upcoming trading sessions. And take a look at how here on the 4-hour chart we are seeing the clear unfolding of a golden cross. You guys can see how this 50 SMA already actually crossed above this 180 SMA, as I just said, on the 4-hour chart. So this would be suggesting more upside for the 10-year Treasury yield, and if that were the case, then we are likely to keep on seeing more downwards pressure when it comes to higher multiple stocks and tech stocks as well. And before going over, guys, the S&P 500 and the Nasdaq 100, I want to show you some trades that I took in today's trading session, and I left a lot of money on the table, guys. Let me show you. So first of all, I had to take a loss. I was trying to play it safe, guys, because the markets were very volatile this morning. So I took an unnecessary loss, in hindsight, with SPY, because this morning I purchased 30 shares at $461.47, and I ended up cutting the loss at $459. So I paid $13,844, and I ended up cutting the loss, paying $13,795. I ended up taking a loss over here, an unnecessary loss in hindsight of $50. However, guys, I sold a covered call on Tesla, and mind you, I broke even on a trade on triple Q, that was also unnecessary. If I hadn't cut the loss, or rather, if I hadn't broken even on that trade, I would have ended making very good money out of it, because the Nasdaq 100 and the Nasdaq ended up pulling off a green day. But whatever, guys, hindsight is 2020. I was playing it safe, so I don't feel bad about it. So in the case of Tesla, guys, I sold a covered call. You guys know that I am a long-term investor in Tesla. So I sold the 1,270 call that expires on February 11th, and I was paid $1,220, guys. Is Tesla going to be above $1,270 by February 11th? That could be the case, but I don't know, guys. I am not really let's say, hopeful about the CPI data report that we're going to get on Wednesday. So if Tesla happens to drop, I can buy back this call, paying a lower price relative to the price that I was paid today. And if Tesla happens to keep on going up, then I can obviously roll it over. And I also bought back a couple of covered calls on NEO, guys. So on January 7th, I sold 2 covered calls. I sold the $35 calls that expire on May 20th. So I was paid $628 way back then, and today, since NEO fell off a cliff, just like the 80% of the stocks out there, I decided to buy back the 2 calls that I sold, and I paid $476, so I ended up making over here $150. So long story short, in a very negative day for the markets, I ended up making $1,320, give or take. So I cannot complain about today's trading session. And when it comes to the S&P 500, let me show you here quickly, guys, the 4-hour chart of the main index of the United States of America, and take a look, guys, at how this 180 SMA on the 4-hour chart has turned into an absolute nightmare for the bears of the S&P 500. So they failed trying to break this moving average to the downside back in early December. Then they also failed back in mid-December, and today they failed at breaking this moving average to the downside once again, because the bulls ended up reconquering this very important technical area into the closing bell. So the S&P 500 went down today 0.14%, and it closed today's trading session at 4,670 points. Let me show you guys the unbelievable V-shaped recovery that we witnessed today. So the S&P 500 absolutely collapsed. As soon as the trading session opened, the bulls found support at 4,582 points, and after that we saw a massive recovery of almost 2%. And as I said in the introduction of this video, this was an unbelievable day that many of us won't forget in quite a long time. So what would be the most important task for the bulls of the S&P tomorrow? Well, that task is going to be taking on 4,670 points, because today we closed at 4,670 points. This is not a coincidence, guys. We are talking about a former area of support back from November. So the main task that the bulls of the S&P need to carry out tomorrow would be starting to consolidate slightly above 4,670 points in order to gather momentum and possibly being able to make another push higher and fill the next gap up to 4,700. 4,700 happens to be a former area of resistance also back from November of last year. And maybe if the bulls happen to have a very positive day, that obviously is going to depend on whatever Mr. Jerome Powell testifies in front of the Senate tomorrow, then maybe they can reconquer 4,700 and maybe, who knows, try to take on this 50 SMA on the 4-hour chart near 4,712 points. So let's see what happens tomorrow with the S&P 500. When it comes to the Nasdaq 100, we have, for the most part, a similar situation relative to what happened in the S&P 500. And as I just said, unbelievable comeback for the NDX. It ended up going up 0.14% and closing today's trading session at 15,614 points. So let me pull up here the 1-day, 1-minute chart. And as I just told you, in the case of the S&P, this index absolutely collapsed. As soon as the trading session opened, the bulls managed to find support at 15,160 points, and then we saw a very amazing relief rally of 3%, bottom to top. Absolutely unreal, guys. So what's the most important task for the bulls of the NDX tomorrow? And as I just said, guys, and this is something that is extremely important to be pointed out, Everything is going to depend on whatever Mr. Jerome Powell testifies tomorrow in front of the Senate. If Jerome Powell happens to sound a bit hawkish, then obviously we are very likely to see the Nasdaq 100 giving up the recovery that we saw today. So the most important task for the bulls of the NDX would be bursting above 15,660 points, guys. We are talking about a former area of resistance and also a former all-time high back from September of last year. And if that area of resistance happens to be broken to the upside, then the other important task for the bulls of the NDX would be filling the other gap up to this 180 SMA on the 4-hour chart up to 16,000 points. Both indices, guys, the Nasdaq 100 and the S&P 500 aren't overbought. We saw a very respectable relief rally today. So we could keep on going higher. Maybe, whoever, let's say, wrote down the report of JP Morgan saying that these indices were extremely oversold and that the massive sell-off that we have seen over higher multiple stocks is overdone. So if that report or if the person that wrote down that report happens to be right, we might still see more upside in the case of these two indices. But let's see what Jerome Powell is going to say tomorrow in front of the Senate. And the very first stock of this video was a stock of a company that went up today a lot, guys, despite the fact that we had a nasty day today. I am talking about Tilray, which managed to went up today 13.55%, and it closed today's trading session at $7.29, and Tilray reported earnings this morning. So let me pull up here the information of the earnings report of Tilray, guys, because it was a mixed report, according to my opinion, but the markets welcomed this report in a very positive way. So net income increased to $6 million from a net loss of $89 million in the previous year quarter. Adjusted EBITDA was of $13.8 million, representing 8% growth compared to the preceding prior quarter and making for the 11th consecutive quarter of positive adjusted EBITDA. Gross profit of $32.8 million was a 7% decrease from $35.3 million in the prior year quarter. So adjusted gross margin in the cannabis segment was stable at 43%. And according to the report, Tilray maintained number one cannabis market share in Canada with a portfolio of comprehensive medical cannabis and adult use brands, including a top position in cannabis flower and pre-rolls. And pre-rolls. Oh, guys, I mean, this is hilarious. An international medical cannabis market leader and number one in Germany with about 20% market share. So it looks like, and you guys know that despite the fact that the cannabis industry is very messy, guys, it looks like Tilray is executing its business model pretty well. So check this out, guys. Tilray, and as I just said, went up today 13.55%. But guess what, guys? Despite the fact that the stock of this company went ballistic in today's trading session, Tilray is not overbought. Take a look at the RSI of the stock of this company, 60 points. So this implies that Tilray was extremely oversold, and that also implies that we still have room to the upside, because from a technical standpoint, Tilray is not overbought. So I am going to zoom in here on the 4-hour chart, and I'm thinking, guys, that if the bulls of Tilray can consolidate slightly above this 50 SMA on the 4-hour chart, slightly above $7, that might be a sign that they are gathering momentum in order to make another push higher and potentially being able to fill the next gap up to $9.80 which happens to be a former area of support back from October. So let's say that we pick up some shares of Tilray near $7.20, $7.30, and if we are able to write them up to $9.80, we are talking about a 25% profit. So don't sleep on Tilray, guys, because I believe that if this 50 SMA keeps on providing a good support, we might see $9.80 coming up for this MJ stock. And the second stock of this video is going to be Beyond Meat. And in the case of Beyond Meat, guys, we got very good news. They got a deal with Kentucky Fried Chicken in order to sell their products in something like 4,000 restaurants of KFC all around the world. And take a look at what happened ever since this news was announced. Beyond Meat has been going down because this news was announced on January 4th, and as of now, Beyond Meat hasn't done much, guys. It actually dropped a lot since we got the news. Then it went up. It found a huge resistance at $73, and today it ended up going down 2.77%. But don't be mistaken about it, guys. That was very, but very good news for Beyond Meat. So I'm thinking that the stock of this company is at a very tricky spot, guys, because we are trading between both moving averages. This 180 SMA and this 50 SMA on the 4-hour chart. So I'm thinking, guys, that if the bulls of Beyond Meat, and let me zoom out a bit here, if the bulls of Beyond Meat can take on this 180 SMA on the 4-hour chart near $70 at the same time with good volume and momentum, they are going to be able to take on the next important area of resistance near $72.50. So if that were to happen, and if the bulls can take on this moving average and the next resistance on good volume and momentum, as I just said, they have a first chance of filling the next gap up to $85, which happens to be a former area of resistance back from mid-November. So if we were able to take a momentum trade once Beyond Meat were able to burst above $72.50, let's say that we pick up some shares at $73-ish, and if we happen to be able to write them up to $85, we are looking at a 15% profit. So watch out for Beyond Meat as well. And the next stock of this video is going to be a defensive stock in which I opened a position last week, United Health Group. Full disclosure, I own call options of United Health. So the stock of this company went up today 1.40%, and it closed today's trading session at $465. So let me go ahead and show you guys the position that I have as of now on United Health. You guys have to understand that since we have a lot of inflation fears, and since we have the markets freaking out about interest rates and so forth. So we have to try to aim, guys, at stocks that might be benefited from inflation fears and interest rate hike fears. And United Health is a very important component of the health care sector that, by the way, let me show you over here, guys. Let me take a look at the sectors of the markets. So the only sector that was able to pull off a green day today, other than technology, you guys know that the Nasdaq 100 and the Nasdaq were able to to see an epic recovery today. So let's put away the tech sector, because this was a special case today, right? Because of the performance of the Nasdaq 100 and the Nasdaq. But take a look at the healthcare sector, guys. In a very negative day, this sector went up today 1.03%. So when I purchased the call option of United Health that I just told you guys about, by the way, I think that I pulled up the wrong portfolio. So take a look at this, guys. So on Friday, I purchased the $460 call of United Health that expires on April 14, and I paid $2,788. As of now, I have a positive return over here of $118. So what's my plan when it comes to the call option that I just showed you guys? First of all, I am very confident, guys, With this trade, I ended up putting a lot of money on the table. We're talking about a call option. You guys know that these instruments expire. They have an expiration date, but I am very confident that while we have inflation fears and interest rate hike fears and so forth, the healthcare sector and most of the defensive sectors such as utilities and also consumer staples are going to do pretty well. So I'm thinking, guys, that the second the bulls of United Health managed to take on this 180 SMA on the 4-hour chart near $467. We are also talking about a former area of resistance back from early November and also back from late October. I think that the bulls are going to be able to fill the next gap up to $475. $475 happens to be a former area of support back from mid-December. So if any of you is interested in taking a trade on United Health, watch out for this breakout, because from $467 up to $475, we are looking at a 2% profit. And actually, I am thinking about $475 as the spot in which I am going to be selling out of the call option that I just told you guys about. And watch out for the oversold condition of United Health, because earlier today the RSI of the stock of this company was at 17 points, extremely oversold, and despite the fact that United Health managed to pull off a green day, it is still oversold, guys, at 33 points. So I think that we are very likely to see $475 sooner rather than later. And the last stock of this video is the stock of a company that Speaker Nancy Pelosi is taking a gamble on Roblox. You guys know we found out in late December that Nancy Pelosi loaded up on call options of Roblox that expire on 2023. Roblox actually went up today 1.36%, and it closed today's trading session at $85.52. The relative strength index of Roblox is at 39 points, very healthy from a technical standpoint. So I'm thinking, guys, that if we keep on seeing a recovery when it comes to the Nasdaq 100, Nasdaq, and higher multiple stocks and so forth, I think that Roblox could be a short-term trade, guys, because we are slightly below a very important area in technical terms at $86. $86 happens to be a former area of resistance back from late October and also back from mid-August. So I'm thinking that the second the bulls of Roblox can take on $86 on good volume and momentum, they are very likely to be able to fill the next gap up to $90. $90, by the way, happens to be a former area of resistance back from early September and also back from late August. So check this out, guys, from $86-ish, let me see here, $86-ish up to $90 or $91, we're looking at a 6% profit trade, nothing to sneeze at. And take a look at the RSI of Roblox. It is at 38 points, as I just said, very healthy. So I think that if this area at around $86 happens to be taken on good volume and momentum, 92 or 91 bucks are coming for Roblox, and that would be an opportunity to take a short-term trade. And with Roblox, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays as well. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do things a bit differently, because here we talk about the markets into different languages, English and Spanish, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Peace out.